Welcome to the Real Money Show, the number 18778 Silver, the website guildhallwealth.com. My name is Jeremy. I'm joined by Jerry, and the week that was, we had a BRICS get together. A lot of stuff came out of that. We also had the Federal Reserve at Jackson Hole, where they all patted each other's backs, and we had some great movement in the precious metals market throughout the week. So let's start with that, Jerry. Nice pop up on silver. We were in the I want to say the 2370 range, 2365 even as low as, and we got a nice pop above 24. Gold that has been trading a little bit below $1,900, popped back up above as well. What did you make of those moves this week?
Certainly fuel to the fire, Jeremy. I think this was just added to the momentum that we're seeing. We're filtering through a lot of noise as we talk about. But seeing the metals play out the way they did, this is just the beginning, in my opinion. I know there was a lot of anticipation for the Federal Reserve, who is actually meeting right now in Jackson Hole, to potentially pause or not to be as aggressive. His statement right now that came out was pretty hawkish. So Fed Powell, remember these meetings are just a place where the Federal Reserve members meet every year, and they really just pat each other on the back and say how well they're doing to combat inflation. Remember, their dual mandate is to make sure their inflation's up and the dollar
inflation's down.
Employment up and inflation down. They're failing at both. So it was a speech that we were all anticipating. He sounded rather hawkish. He says, "We will proceed carefully on whether to hike again," Powell says, "but they're prepared to raise rates further if appropriate." He says the real rates are positive, well above neutral, and persistent above trendline growth could warrant further tightening. So his positioning is exactly what he does year over year, whether it be Powell, whether it be Bernanke, whether it be any one of them. Jackson Hole is a meeting where they talk up the U.S. dollar. So quite anticipated, but metals are still showing very resilient despite the hawkish tone. I think we're all expecting that. But yeah, for silver coming off the lows of about $22.80 back over $24, we had a very solid 4% move, quite rapid.
Oh, did we drop to 22.80?
Yeah, we carved a little low.
Wow, I didn't even...
on the technicals.
I wasn't quite paying attention, I guess.
But a lot of news coming out. You know, the BRICS meeting especially. We were waiting on that, Jeremy. So we should probably touch upon that.
Okay, let's dive into that. So a lot of people in the gold market anticipating something to come out of the BRICS with a tie to gold. Now, we didn't get that per se, but we did get that there are several new countries looking to join. One of them specifically is Saudi Arabia. That is really the tie to the petrodollar. So with Saudi Arabia joining, which is now inevitable, that severs that final tie on the petrodollar. But we didn't quite get the BRICS is going to back a currency by gold. Now, let's start there. What did you make of people who thought that was what should be expected, and were you disappointed that that's not what came out?
So yeah, there was a lot of anticipation with the BRICS and gold being definitely the hot topic. What are they going to do with gold? Is it going to be a gold-backed currency? Is gold going to be convertible to the currencies, to the rest of the currencies? Will they potentially peg a barrel of oil to 2 grams of gold? That was definitely a potential. Never really binary with the gold market. If inflation is high, then gold must be taking off and breaking out. This is a massive restructuring, what we're seeing, and a massive new alliance that is taking place right before our eyes, moving away from the World Trade Organization to the BRICS Trade Organization. And this is what we've seen. New members, the Johannesburg II Declaration came out, and there were some new members that will be announced come January 1st of next year. They are Argentina, Egypt, Ethiopia, Iran, Saudi Arabia, and the United Arab Emirates. These are major oil barons, Jeremy. This is the death blow for the U.S. dollar hegemony in the oil market, where the Saudis, they pledged a long time ago to sell their oil in U.S. dollars, keeping the U.S. dollar afloat because they they closed the gold standard. And how we keep the dollar afloat? Well, we'll make the world buy U.S. dollars in order to buy oil. Well, that's no more. This is a major, major declaration from Saudi Arabia that they're no longer interested in that type of deal, that they're willing to settle in Chinese yuan and other neighboring currencies. You know, the mainstream was talking this week as well. The establishment media did come online, and we're talking a lot of disunity. We're not going to see the unity of these members. How can nations like Iran and Saudi Arabia get along, or any of these countries get along? This was the narrative that they were pushing. So it's quite the opposite. They were getting along. This meeting was, you didn't really announce too much, but although there was a major announcement I'll get into, but it really showed the unity, Jeremy. Your thoughts on the meeting?
So my big takeaway was that they didn't pull any massive power moves per se, which I think is a good thing. They kept the rhetoric to, hey, we want good things for the world. We want equal trade. We want where it's kind of headed. It seems more to a mercantile kind of trades where it's not about debt. It's not about creating debt structure. It's about equal trade. It's about part of creating a value chain versus a commodity chain, and that it can help empower all of the countries to grow and become wealthy. I think there's others out there that look at it and instantly think oppositional, that eventually the likes of the US, Canada, European Union will have to be brought into that kicking and screaming. I don't think that's what this is about. I feel it's like a forming of groups at the periphery. It's very cinematic. It's like it's like Gangs in New York kind of thing, right?
Yeah.
You've got this joining a periphery. We're not ready to fight, but we're gonna kind of meet you at your border, and you're gonna watch the numbers grow.
Yeah,
you're gonna watch us become emboldened by the numbers, because the enemy of my enemy is my friend. But we're not here to fight you either. Mm-hmm. We're here for peace and equality of trade. And you could call me crazy on all this, but that's what I think they're trying to do. They're saying we don't want the U.S. hegemony of the dollar that has not helped us. It hasn't made us rich. It's subjugated us, and we no longer want that. And I think that the people who live here don't want that either, mm-hmm. right? We see the policies happening here that aren't enriching us. They're enriching others. Look at the carbon tax.
That's one.
There are people asking now online, hey, how much will you raise the carbon tax for fires to stop?
Yeah.
You're saying that somehow raising taxes will stop these things. Mm-hmm. That's crazy.
It's ridiculous.
So we're at the gates,
we
right?
We are.
We're in the gates, and it's happening to us too. So I do applaud what they're doing, and I applaud ultimately the way they're going about it, which is they're not making big power plays. They're just making moves with each other that aren't in direct opposition. They're just saying, hey, look, Egypt and Saudi Arabia can make deals with each other. That's okay. They don't have to use the US dollar. And let's see where it goes from there. Mm-hmm. I think where it goes is, for the gold people and for us, is you have a new system that you're creating. And the way to build trust within that system, there's going to be, as you mentioned earlier, some sort of convertibility, maybe a way to balance trade. It doesn't have to necessarily be a pegging per se. Maybe it could be, as we said, convertibility, and that everyone has to come to the table with assets, something. Mm-hmm. Equally, on our side of our currencies that are all failing and debasing, we're going to have to bring trust back into our own currencies. And how do you do that? Well, at some point, you're going to have to say, okay, we'll make it convertible. We'll back our dollar with gold. What do you need? What will it take? And in the absence of all those things, guys, gold is the de facto gold currency, which is why it's up in every single currency around the world. Gold is moved up in performance. Gold's up 400% over the last 20 years in Canadian dollars. We've only had a downdraft of 4% in gold. That is the only downdraft we've had since 2013. In the last decade, there has only been one down year in gold. Think about that when you're considering your portfolio and where you put your wealth and how to protect your wealth. I know if I'm looking at everything out there, I don't need the stars and the moon. If you can guarantee me, and I know in life there's no guarantees, but if I look back and I say I protect my wealth, there's no loss of purchasing power here, there's no loss of capital, and yet how much has it gone up since then?
I think it's a pretty good bet.
There's a finite amount of gold. It's on the table of elements. You cannot print it. You cannot borrow it into existence. And when all of that money that's become that debt that's become so expensive starts to crumble and not only debase but disinflation, right? When the when the properties start losing value, when the companies start losing value, and the value of the money starts continuing to debase, where are you going to put your wealth to protect it? Gold has been there for thousands of years, giving you that trust that you need. So, and silver's going to be even better because as gold gets more expensive, silver's the people's money. Mm-hmm. People are going to just easily make that economic decision. Gold's at $4,000 and I can buy silver at 100. Well, that's an easy calculation to make. So what happens when you have billions of dollars moving out of banks or moving out of failing currencies or moving out of failing assets, equities, whatnot, moving into a hard asset that's finite? This is why it's going to be so exciting. So we're very excited about what's happening in the market. And you know, we've been around it enough to have the patience as well. Mm-hmm. But everything starts with a small step. Start small. Buy a tube of maples. Buy 1 ounce bar of gold. Buy a couple 10-ounce bars. Get it in your hand. See what that feels like, looks like. And then you can decide where to go from there. And we'll help you. We're the experts. We've been around since 2002. And we've been doing the registered accounts, holding physical, allocated, segregated, actual gold and silver in a registered portfolio held outside the banking system. We've been doing that since 2016. So give us a call. The number is 1-877-8-SILVER. The website, guildhallwealth.com. We'll show you how to get it done. This is The Real Money Show on 640 Toronto. Welcome back to The Real Money Show. The number 1-877-8-SILVER. The website, guildhallwealth.com. We're going to get back into the BRICS because it is a momentous week that we've just experienced with what's happening to the global financial world order. But first, Jerry, let's just talk about day-to-day, seeing what's going on as a Canadian to our dollar, taxes rising, inflation rising, just living through what we're living through. And how does gold and silver help? Because gold doesn't affect shrinkflation, which is something we've talked about for probably a decade on our radio show. We're probably the first people to talk about shrinkflation. But how does it help people who are going through it day to day, whether it's their car payments are rising or, you know, all their payments are rising? How is gold going to help? How is silver actually going to help them?
Mm-hmm. I think when we allude to the goldprice.org chart, when we talk about all of the major currencies versus gold and silver going back since 2007, the common theme is all of the currencies are moving down versus gold. So we need to understand that we need a new standard of value. And gold and silver are that standard of value because every single major currency is crashing before our eyes. And the US dollar is just wearing a parachute. You know, they have a parachute on, so it's dropping a little slower than the rest. But with regards to what we're seeing with our currency being weaponized, the weaponization of our financial system, if you're being told that you cannot transact for whatever reason, they can turn the lights off, they can turn the power off, they can move your currency or lock your currency down. People do not want to be controlled, especially now with with the loss of purchasing power, with the prices going up. People are making hard decisions with their spending. And when you start messing with the food and when you start messing with people's pocketbooks, things get serious, and people are starting to get serious. Back to schools now, the X is open in Toronto. People are looking back at their portfolios. We had a great summer. The summer was amazing. It flew by, but now people are starting to make those hard decisions. Let's look at the portfolio. What is not denominated in a currency that is falling?
So in other words, when you're saying all that, I'm thinking about that gold and silver are the great equalizer. If you have cash under the bed, the government can continue to debase that currency and it buys you less and less stuff. If you have gold or silver under the bed, it cannot be continued to be debased, because the only way that happens is if you're going to mine a whole bunch of it, and the structure in that is that you can only add to the gold supply by less than 2% a year to the entire supply. That percentage hasn't changed in decades and decades. Same thing with silver. And now they're making it difficult for silver. They've banned open pit mining in Mexico. They're making it harder to get it out of the ground, and there's stronger demand for this reason exactly, because it's a great equalizer. So you have to have it, and it's kind of like that adage of it's time in the market, not timing the market.
Correct.
Although that said, this past week I think has been a great way to time it. Let's talk a little bit about that timing, because for me personally, I look at it as ranges. I don't look at it as a particular price per se. I see the silver market as anything under $30, because I believe, and I'll ask you, do you believe that $30 silver is really the line in the sand? Like, if you can get silver under $30, you're ultimately winning, because once we break that $30 barrier, we're off to the races. We're off to a new ball game.
Yeah, we do look at the ranges, and we have to be cognizant of the resistance levels. And 30, 40, 50, these are levels they call psychological pivot points, where if you do break that 30, our sights are going to be on the 40. It starts to really rally. Again, we have not seen rallies in precious metals. Yeah, precious metals have been moving up. They've been performing really well. 4% alone in 1 week for silver. It's amazing. And this is just the very beginning, because if we look at the data and we look at technicals for a quick set, Credit Suisse and Commerce Bank commented on gold and silver. Both see forecasts for a lot higher prices. Commerce Bank sees, the deterioration of the employment situation plus rate cuts to be halted. The timing of that alone. You want to be buying precious metals during rate hike cycles and try to get in during the summer months, because over the past 40 years, metals tend to move higher into the fall seasons. So yes, look at things more on a bird's eye view. Yes, unless you're a trader, you're a day-to-day trader, yeah, you need to know, you're following these charts minute by minute, second by second. But if you take a larger view, you'll be in great shape. Get involved. Congratulations to those people who took advantage last week with the price dips. You did amazing. But I can guarantee if you get in now, looking forward 2-3 years, your portfolio will balloon much, much higher with metals.
The number 18778 silver, the website guildhallwealth.com. When you're talking about kind of looking at the bigger picture and all those things, I'm kind of thinking like cycles and ratios. In 1980, gold hit 850, the Dow fell to 850 points, and that was a 1-to-1 ratio. In 2011, or I should say in 1999, the ratio had ballooned to over 40-to-1. You needed 40 ounces of gold to buy the Dow. And by 2011, it had fallen all the way back down to 4-to-1. 4 ounces of gold would buy you shares in the Dow. And today we're in and about the 18-to-1 ratio. So it is a big ratio, which is telling you either gold is undervalued or the stocks are overvalued. And all you have to do is look at the PE ratios to say that they're overvalued. I mean, I don't know how anyone can't do that. Speaking of that, Jerry, you know what? It kind of came to my attention this week. When you think about all the passive funds, we do it a lot. We look at people's portfolios. They're moving from mutual funds. They're moving out of, managed accounts where they're put into these indexes or mutual funds, etc. That is where we're at with investing. So much money is put into passive funds, indexes, and mutual funds, etc. Mm-hmm. They're all in the same stocks. Mm-hmm. It's all like the same 5 stocks.
The Magnificent Seven.
So how can that not be propping up the stock market? What happens if that portion of the stock market gets a little jittery and people start pulling out? Mm-hmm. The fear is going to be when there is a crash and you can't get out because you're in a passive fund and you're not able to just click the button yourself and self-manage your own account because you don't even know what you're invested in. Mm-hmm. So these managers are going to be trying to get out and they can't. Mm-hmm. Because they're trying to move too many people all at once. It's everybody on the bus, everybody off the bus.
That's right.
And what we find actually at Guildhall is one of the things about precious metals, that first aha moment, and I love for you to talk a little bit about it, is the realization that you are in control of your own wealth maybe for the first time ever, because mm-hmm. nobody controls it once you own that bar of gold or that bar of silver.
Yes, it's so revolutionary. I remember the first time I put a 1 ounce gold bar in my hands, it was so transformative because my background being in currencies, being, a currency trader at the banks, this is all I understood. I saw, the tickers of various currencies, but I would always see the gold and silver ticker at the end of the currency desks. Remember, it's not just a commodity, they are currencies. So when I got that gold bar in my hand, it was so revolutionary in my thinking. It definitely was, and this is why I'm where I'm at today, because I view everything in the lens of currencies. So, but this really bleeds into why central banks are buying it, because why do I get empowered? Why am I feeling so empowered? It's because this is exactly what the central banks gain their power with gold. They're buying gold for obviously for liquidity purposes. You can transact very quickly with gold, being tier 1 capital, but it's independence. You're now creating independence, a moat around your wealth, around your home, with something that is decoupled from all the madness. The independence from currencies, independence from the financial institutions, and we're going to get into that, how many institutions were downgraded over the past week. This is independence. So if you're looking for a way for you to find that control and independence, your precious metals is the way to go. Get some metals in your hands, because if you can't hold it, you do not own it. And that's our motto here at Guildhall.
The number 18778 silver, the website guildhallwealth.com. We've talked about being self-sufficient and being empowered. So we're talking about the great equalizer and being empowered and being self-sufficient. These are great characteristics for the precious metals. And ultimately, I think that, you can look at the imagery of gold as well, what it's represented over millennia. It's been around for thousands of years. It's always been money. But I think, and it has been a currency. It was a legitimate currency as well. So it can be both. Mm-hmm. But I think maybe some people struggle with that. They think, well, we're not going to have gold currency again, are we? Do we have to have gold currency again?
Well, gold and silver are money. They satisfy the 5 characteristics of what money is, and currencies, they tend to die, Jeremy, after a century or so. Fiat meaning let it be so. It's a Latin term, and all of our currencies are fiat. So yes, I believe gold has to be there. This is what we'll get into, and this is the theme that we're seeing with the BRICS meeting. The theme is definitely gold related, and a lot of people in the gold communities, they didn't hear. A report came out, which we'll get into in the next segment. A 36-pager came out, and people skimmed through it. We skimmed through it. We went through it, and there was not one mention of gold. So it did definitely upset people. It upset a lot of people, but if you get into it, especially that section 10, which I'll get into in the next segment, it does involve gold. So you cannot have a currency that will last and an empowered currency, a currency that will actually last long without gold. It's that simple.
The number 18778 silver, the website guildhallwealth.com. Gold is independence. Gold is equality. If you don't hold it, you don't own it. And or if you can't hold it, you don't own it. If you can't get to a vault to personally audit your holdings, then what do you own, right? Why make an investment in gold when it's actually an asset? It's about ownership. And, we've always said the debts don't matter until they matter, and they are starting to matter. Right now, even the States, 32 trillion plus, they're rapidly approaching 33 trillion, and the interest on that is already outpacing their military expenditure. Think about that as we go to break. The number 18778 silver, the website guildhallwealth.com, The Real Money Show on 640 Toronto. More to come. Welcome back to The Real Money Show. The number 18778 silver, the website guildhallwealth.com. If you're looking to get into the physical gold and silver market, give us a call. We'll show you how to do it. It's all about starting small, get some physical gold, silver coins, small bars in your hand, see how that works. Make it part of your cash component portfolio. We all have cash for a rainy day. Maybe you want to have a few tubes of silver maples for a rainy day. Maybe they end up being great gifts to give away and teach the young people of the world what money really is. There's nothing better than giving a 10-ounce bar to someone and them looking at it 10 years later, realizing, whoa, this is a really good gift. I don't remember anything else I got. I don't remember the cash that went in the bank. I don't remember the toys. I remember this 10-ounce bar that I received, right? Or a 5-gram bar of gold. These are great ways to get involved and help teach people about money. We've talked about it on the show. I want to just repeat it. This idea that when we don't use cash, we put money into the pockets of the financial institutions, but not into our community. It gets a little shaved off the top each time. And so this, again, is part of that dynamic of educating people about money. Yes, it's a currency. Yes, it's a debasing currency. Mm-hmm. But if you go digital, it's just one example of, let's just look at fees. Fees are one example of how you are taxed for using digital. It's not your money anymore, right? There's a cost to it. Mm-hmm. It's so convenient. Hey, listen, I love paying for convenience. Okay, I do. I always dry clean, yes. Right? I go, that's a great convenience, right? But at some point, your wealth is being stolen, and this whole idea of digital currencies and digital this and digital that, we want you to be digital cars and all of it. They don't like what you have to say. Gone. You've seen those videos in China and whatnot. Mm-hmm. Now, I don't know what's real because we saw that at the beginning of the pandemic, these people dropping like zombies. It's hard to tell what's real these days. But there are people saying, look, if the government doesn't like what I say, I can't go buy food. Mm-hmm. Let alone going on a trip somewhere. They just cancel your phone because everything is attached digitally. And now they want to, now you can implant for digital. We always knew that was coming too.
Yeah.
So how do you combat that? Does gold play a role in that? Is it a way to, again, be an equalizer?
Yes. I mean, this is the one way of avoiding and staying away from this massive push of over digitization, which is really one way of controlling capital. And right now, the fees are X right now, but there's no control as to how far those fees can go, how far the inflation, the taxes can go. So when you have gold and silver, you're outside of that. You're outside of that threat. And this is one of those things that we're seeing. It's an entire weaponization of the financial system, and this is something that was talked about in the BRICS meeting over the past week. So it's a huge theme.
So let's get into that. So there was a report put out by the BRICS. We sifted through it. No mention of gold, but there were some key points that point towards it without actually talking about it and stating the word gold, mm-hmm, right? Mm-hmm. So tell us what you found in this report and how that plays into physical precious metals.
Yeah, for sure. It was a great meeting. I think overall we did skim through, and we did share the report in our latest newsletter that was released. So I encourage everyone to check that out and go through. But yeah, the themes of human rights were discussed. A lot of women empowerment over the course of the meetings, and they have a 36-page report. So it's very in-depth and very succinct as to what these steps want, what their demands want, and what the demands were of these nations. A lot of equality and the end to unipolar and an entrance and encouragement of a multipolar world. A lot of decrying against the negatives of this uniparty decision on sanctioning and using sanctions to kick out countries from your party. It was absolutely crazy.
So, in other words, another way to frame that is that U.S. dollar hegemony meant that they could push their weight around. You don't like, it's fine if it's working, but if you go rogue and you step in the wrong direction of whatever their policies may be or whatever their thoughts are, then you're cut off.
Yes, and
potentially at worst cut off, maybe sanctioned a little bit here and there. But it's the idea that if you have a single currency that's controlled by a single person, a single entity, and they by any reason go even the little slightest bit rogue, and you're in the way of that. Mm-hmm. We got problems. And,
That's right.
And a lot of these countries have been subjugated by the states over the years.
Yes, which ultimately lead to, a weakening of the economies. There's low growth. If you cannot transact, your economy gets impacted. The people get impacted. And a lot
no different than what we were just talking about a digital ID.
Exactly.
And you don't get light if you're not doing everything exactly the right way and you have a dissenting voice in any which way possible. You could be running amok of the regime.
Yes. So it can happen here in society here, but it's also happening on the global stage. So this is what was exactly the same theme being discussed. And it was great and refreshing knowing that the theme of moving, especially in the continent of Africa, the nations that export, you're no longer exporting. You're no longer just an exporter. We want to see your value in this. It's an empowerment. It's leveling the playing ground. And we went through all 36 pages. And going back to the gold situation, no mention of gold, but I want to encourage everyone to check out subsection number 10, where the BRICS nations, they support a global financial safety net with a quota-based and adequately resourced international monetary fund. So a lot of old systems are being restructured. We're hearing about the World Trade Organization, the UN, and the IMF. They're going to be restructuring these organizations, including the IMF. And they called for a reform of the Bretton Woods institutions. And this is massive because let us just remind everyone what the Bretton Woods system was all about. The Bretton Woods system required countries to guarantee convertibility of their currencies into US dollars within 1%. And now this is a big impact for us Canadians. We're now importing, the rate of exchange is about 1.36.
Oh, so what that does is if you have to keep it within 1%, everyone's tied together. It's like a three-legged race.
Exactly.
So you can't undermine your currency by saying, oh, you know what we're going to do? We're going to drop our currency and make it competitive against this and that. So everybody's tied together.
So we have that. We'll have the US dollars within 1% of fixed parity rates. So leveling the playing ground, we no longer have to import this FX conversion, this FX spread.
Let's go to break and let's keep up on this topic because I think there's a lot more to unwrap here. The number 18778-SILVER, the website guildhallwealth.com. Give us a call. This is all about physical precious metals, and the BRICS definitely want that as part of the value chain and as part of the backing of this system. So more to come on The Real Money Show on 640 Toronto. Welcome back to The Real Money Show. The number 18778-SILVER, the website guildhallwealth.com. We're just reviewing this 34-page report put out by the BRICS. They did mention that they want to reform a lot of these international bodies. Sounds very Nasera Jacera, if you ask me. But nonetheless, maybe that's just something mapping onto each other. But talking about Bretton Woods, Bretton Woods was about having a gold standard in effect where everything was convertible into the dollar, and the dollar was convertible at $35 to the ounce. Now that they kind of corrupted that because they were printing all the money, and then by 71 it was completely defunct. So, but they talked about reforming that.
That's right.
In what respect?
They didn't. A reform meaning you're going to have a greater role of emerging markets in developing countries. And we know that these emerging markets and developing countries are really gold, miners. They have resources, and these are the resources that will go back to adequately resourcing the IMF. So the IMF, we know, is the author of the special drawing rights. They have their own currency that just have other currencies involved. If this is restructured with resources, what potential resources could we see within SDR, Jeremy? Could it be oil? Could it be gold? I think it definitely should, and it could. But this reformation of the Bretton Woods institutions, yes, you hit the nail right on the head. This is currency related, no more. You're gonna just a reminder: Bretton Woods system required guarantee convertibility of currencies into U.S. dollars within 1% of fixed parity rates, and the dollar being convertible to gold bullion for foreign governments and central banks at that time of $35 an ounce. And this is just, this is definitely sounding very Nasera Jacera. You're talking about parity rates, and even we talked about this last week with the Germans' gold revaluation account. Gold needs to be revalued. They had it valued at $35 an ounce back then. It's still there. And when we see that gold revaluation account in association with what's happening with the BRICS, this is very, very mighty. This does include gold. So if you do a Control F and search for the word gold in this report, you're not going to see it, but you get into it, understand what Bretton Woods is and why this is a solution.
Okay, so that was the major part of this, that they're looking to have something like that or reform it. Was there anything else gold related that you saw in between the lines on this report at all?
Just the countries that were involved. Despite number 10, I think the countries that were involved in being empowering these countries, we're seeing a lot of the countries that have the gold and have the silver, being India, they're being empowered to stand up and defend the exporters, defend the farmers. We saw India impose, a ban on exporting onions. Like, what's the deal with the other major export of onions? This is a value chain issue now. This is no longer about supply. We're going to equal the playing fields with resources.
Yeah, and I think what's interesting about that in a very really changing everything up. We've bought lots of throwaway clothes over the years, right? Well, that's a big part of just like pure supply chain versus value chain, where you've sent off cheap labor, right? And that cheap labor is going to say, no, we want more than just cheap labor now. We want to do more. We want more for what we're working at. And that could be the same as pulling commodities out of the ground, just saying, look, we're not just going to grow corn or grow soybeans or whatever. We want to be part of producing something that can be shipped to you as opposed to just shipping you the commodity. So I think that's good overall, that kind of equality. I mean, isn't that what the left is looking for?
Equality and women's rights. Yes. Human rights.
So, speaking of human rights, James Turk talked about the fact that what they're doing to the currencies right now is a human rights violation. To be stealing your wealth right now, if you're paying 30, 35, 40% income tax, 13% on every goods and service that you buy, you're paying after tax. And then now inflation, if we look at shadow stats, what the real inflation rate is, it's closer to 11%, not the 3 or 2.8 that the government's saying. That's up to 70% of the value of your work being taken away. Come on. That's theft. That's a human rights violation.
Yes.
And let's just remind people that the Boston Tea Party, that happened for, I think it was something like 2 or 3%, and they lost it. So, we've put up with a lot, and it's nice to see people being, these entities being emboldened. Let's talk about Exeter's pyramid. Money's getting more expensive. These bubbles are going to be bursting. Everything's going to be collapsing into assets that can't get destroyed by a currency collapse or by anything that can be deflated. There's more than just gold and silver that one could own as a way to protect against the deflation of assets bubbles bursting, isn't there?
Absolutely. One of those assets would have to be natural fancy color diamonds, a Guildhall investment grade stone, one that we take the guesswork out. And you don't have to be a GIA certified diamond grader to understand what rarity is. And when you understand what rarity is, and Guildhall does a great job of showing that, Jeremy did an amazing job of getting into the rarity aspect with the FCRF, who have created indices so that we can now track the real data showing what real rarity is and why these diamonds, that Guildhall natural fancy color diamond, is the way to not only defend yourself against devaluing currencies, but you're diversifying your portfolio even further with a very rare hard asset. A natural fancy color diamond is the best kept investment secret. It is, one of the investor's best friends. This is perfect for your portfolio. If you're looking for a way to concentrate your wealth, if you see yourself leaving the country because of Christia flee my land, free land, this is the one way of doing it. You preserve your purchasing power with hard assets. And a diamond like a pink diamond from the Argyle mine. The Argyle mine no longer produces these luxurious pink stones. And if you're looking at diversifying further, if you have if you do have a budget of 50 to 60K, you need Guildhall to show you how to build a nice hard asset portfolio with some gold being your foundation, silver being your moneymaker, and a natural fancy color diamond for generational wealth building, and pass that on. There's no better place to be.
Yeah, they're beautiful assets. They've continued to rise in value. You're seeing them go for tens of millions of dollars at auction, and we go after the same sort of quality, albeit smaller diamonds that you can put into the regular person's hand for generations to come and have that wealth purely protected. Give us a call. We're happy to show you how that all works. Jerry, great show. Thank you for bringing all of the information about the BRICS. I found it personally really informative, and now I can kind of put the right lens on as I see things progress from here, because I think it's going to be very interesting as BRICS continue to come on. And I think that the markets are going to get real shaky here in North America. So I personally would want to be very well protected when that happens. The number 18778-SILVER, the website guildhallwealth.com. Thank you for everyone joining us and listening to The Real Money Show here on 640 Toronto, and we'll speak to you next week.